It's about that time of day again here, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Monday evening, October 26th, 2015. Hope you guys had a great Monday out there. Jam-packed newsletter in store for you guys and gals this evening. Crude oil is bearish with a spike in channel, which means we'll be expecting a deep correction off today's lows before the next leg down on the oil markets. We're going to plan for the crude oil tomorrow for you guys. The E-mini S&P range bound and sideways this evening. Our plan will be to wait for failed breakouts to sell the highs and buy those new lows until we see a new trend. We'll be watching that 2-try rule on the S&P for tomorrow. And of course the gold, very similar on gold. Gold looks a little bit bullish, but it is quite range bound this evening. So our plan is to buy the lows, sell the highs, fade all the breakouts on gold tomorrow until we see that 2-try rule qualify a successful breakout for us in one direction or the other. And then the euro is a little bit slippery here on. It's got a spike in channel, a major channel, very bullish this evening going into tomorrow's session. Our plan on the euro is to look for buying opportunities at the channel lows while the price rotates from lows to highs and highs to lows on the euro. As you can see, guys, we got a plan for crude, S&P, gold, and the euro. Before we jump into today's charts, please remember to read the disclaimer in the description of this video for more important information. Don't forget, make sure you read our disclaimer inside the description in this YouTube video. Make sure you guys are aware of all the important necessities if you decide to trade along with us tomorrow. And of course, I want to make sure to remind you guys to watch this video on our trading blog here at sidewaysmarkets.com. A couple of reasons why. First of all, on our trading blog, you can register for our free pass to come out and test drive our live trade room as a guest for a day. If you're not a member here at schooloftrade.com and you'd like to grab a free pass to attend our trade room, upper left-hand corner, right above the video there. Lower left-hand corner, just below the video tonight, you'll see a spot to register for our nightly newsletter mailing list. All I need is your name, your email address, and then make sure you check your inbox because I'm going to send you a verification email. Right below the video tonight, you'll see a spot to download all of the charts that you'll see me using in tonight's video. Download those charts right below the video on our blog. And then over on the right-hand side, you can get more information about trial memberships, membership information, member reviews, and of course, don't forget, we've always got someone standing by 24/7, 365 to give you guys a hand every step of the way. No question too big or too small for us, so definitely use that button on the right-hand side to ask for help if you need it. We get a jam-packed newsletter in store for us. We got a busy, busy week. They just finished up daylight savings time in Europe. If you felt that little bit of sluggishness as the week began, we have a very interesting week here this week. We got a Fed week. We'll talk about that in a little bit. We've also got that week where daylight savings time finished up in Europe. We're not going to get daylight savings time finishing up until this weekend here in the United States. I know, wah, wah, wah. I know, we don't want to think about that right now, changing those clocks back, but we definitely do have kind of an interesting week ahead of us here this week. Again, we've got the FOMC announcement on Wednesday. That'll start playing into tomorrow night's newsletter. And really that kind of feeling of just kind of, sluggishness. It felt like the markets were a little bit asleep today as our friends in Europe, they changed or they finished up daylight savings time. They moved their clocks back an hour, and we won't do that until next week. So 11 o'clock is 10 o'clock, and, well, as you can imagine, that's what's going to lead to a little bit of confusion this week. So bottom line, daylight savings time led to the low volume we saw today. We've got a Fed announcement on Wednesday afternoon. That'll be talked about in tomorrow night's newsletter. We got a full day of trading tomorrow, so let's get ready for it tomorrow. Crude oil is bearish, spike in channel this evening, which means we expect a deep correction off today's lows before that next leg down. Now, with today's strong bearish trend, we know the sellers are clearly in control right now, but the sellers who took this price lower, they're going to have to cash out their profit on this move down. That's going to result in a correction back higher. Buyers will also be trying to buy these lows this evening and into tomorrow's session. So we're definitely expecting to see a short-term correction higher Our plan will be to get up into that correction zone, look for buyers to fail, and then try to bring this thing right back down here. So looking at the major components we see on this chart for crude oil, first of all, you can definitely see the volume is significantly weighted to the downside right now. Not going to give me any trading direction on that or trading decisions on that, but definitely gives me a visual indication of where the most amount of bullets have been fired here in the last 24 hours. We can also see a very small trading range that formed right out the gate this morning. And if you're with us this morning in the trade room, we saw how that range quickly broke down and turned into a rotational environment. But the reality is that trading range is still going to be lingering up here, and that may end up being a full-blown correction until we get that next leg back down. We'll be watching more about that tomorrow. And the reality is, most important thing though is this spike in channel down. You can see how it pretty much just falls right out of bed, and then we have a nice, well-behaved channel, what I would describe as being a lazy channel, and that, of course, goes right along with the characteristics we expect to see in a spike and channel pattern. So, bottom line, guys, when you see a spike and channel pattern on the charts, we know the spike down tells us the sellers are in control. We know that laziness of the channel, right, that followed that spike down, that laziness is because the sellers who got in earlier to really drive that thing lower, they're already in this market right now. And the only way to get them out of this market is going to be, of course, for them to take profit. So we expect price to go higher here. Now, usually what happens is this. Usually the correction on these spiking channels are going to go up to the base of that channel. So we're going to be looking for a correction higher followed by buyer failure to see that price come right back down. So don't get me wrong, this price may end up all the way back to where we saw that, right, that trading range up top, right? That may be where we make a full-blown reversal all the way up, but this market is definitely still bearish, and we're going to be looking for those buyers to fail. So we're definitely expecting here a short-term correction higher. So if you're a buyer right now, you can definitely be taking nibbles out of this market as it goes higher on crude. But just be careful, though. This is a bearish market we're seeing right now. So the edge right now is going to be for those buyers in the tape that we're seeing right now. So absolutely watching that spike in channel as the most important clue we see in the chart here today for crude oil. That tells me we have strength to the sell side. It also tells me that we're probably going to get a correction back higher into this correction zone, which of course is going to be that area between the base of the channel, right, and those major swings you see overhead. So that correction zone is where we expect to see buyers to take it up into, and then we'll be looking for those buyers to fail to sell this sucker right back down. Guys, don't forget, always wait for proper trigger on these, and if you don't know how to qualify the entries on these, because we're not blindly selling these boxes. I gotta still keep getting emails from people who are just blindly selling these areas. And guys, if you're blindly selling these areas overhead, well, you deserve to lose your money, because we don't blindly trade, right? We wait for the proper entry trigger. We'll be talking about that in real time tomorrow as we watch these markets develop. How about the S&P? Flat as a board here right now, and you're going to see quite a bit of this most likely this week. This looks like a market that is waiting on FOMC right now. I'm not sure what they're waiting on. I don't think there's really any question about rates this year. You know, we've been talking about this all year. There's no possible way they're going to raise these rates this year. So, and I don't think many people out there right now really do believe, or any smart traders out there, informed traders out there believe they're going to raise rates this year. So I'm not sure whether this was a little bit of the daylight savings time change in Europe, right? That always kind of throws the markets for a little bit of a loop for 24 to 48 hours. And trust me, I'll be dealing with that jet lag this time next week. You know, you come back after that daylight savings time shift and just feels like you got off an airplane you've been riding on for the last 24 hours. So definitely seeing this sideways range. Maybe it's daylight savings time. Maybe it's the Fed announcement tomorrow. Maybe it's the fact that we didn't have any major news on the counter today. But that's going to be changing here tomorrow. We get a lot of news coming tomorrow, and of course on Wednesday we'll finally hear from the Fed in this highly anticipated 8-time-a-year FOMC announcement. S&P is range-bound and sideways. Our plan is very, very simple on these range-bound and sideways markets. You can see the trading range. You can see the volume profile completely sideways. Our strategy is very, very simple on scenarios like this. Fade, fade, fade. Fade those breakouts to the highs, fade those breakouts to the lows. And basically what we're going to be doing is as the price goes higher, I'm going to be looking for buyers to fail to sell it back down. As the price goes lower, I'm looking for sellers to fail so I can buy it right back up. Now, while we're waiting for that, we're going to use the 2-try rule. And of course, all of our students here at School of Trade, you guys should know what the 2-try rule is. If you don't, we'll talk about it tomorrow in our trade room. Absolutely, we will. So don't forget, range-bound market, we do expect price to rotate from highs to lows, lows to highs, highs to lows, lows to highs, right? We do expect range rotation. We're looking to sell the highs and buy the lows. And how we do that is we look for failure patterns, right? So we break out to the highs, failures from the buyers, selling it back in, break to the downside, failure from the sellers to buy it right back in. And then again, as we do try to break out, you'll notice we have some measured moves above and below. We have some range, what we call range expansion levels above and below. And these are going to make for excellent areas of resistance overhead to continue to fade. Guys, the reality is until we see the buyers try once, try twice, and keep going, until we see that 2-try rule, sellers try once, try twice, and keep going, until we see definitive evidence that this now is a trending market, we will continue to look for failure opportunities. And again, we're not just blindly buying lows and selling highs. We are waiting for the proper entry trigger. So don't be foolish and gamble your money away by just guessing to sell the highs and buy the lows. Wait for the failures. And if you need more education, if you need more information about what failures look like, don't forget, that's exactly what we teach all of our students here at School of Trade. We'd love to see you guys in our trade room with us tomorrow so you can learn right along with us. Next up, moving from the S&P now to that funny yellow metal, the gold futures. I'll tell you, this market has an air, it definitely has a smell, a whiff of bullishness to it, as you can see, but very difficult to call this a bullish market right now. You can see the bulls specifically, I'm looking right here, they really had a hard time keeping that low of the channel, if I can draw correctly here. Looking specifically at this area towards the end of the morning here, we can definitely see the buyers tried and failed. They tried a few times to keep that price going higher here. So I'm going to give a slight edge to the bulls. But you can see, though, the low of that channel was broken, right? Members in our trade room, we call this a dead man walking, right? This is a dead man walking channel. We can see already got our A, B, C, D on the way up. You know, so if I had to guess right now, I would say we dig into these lows a little bit and then look for that buying opportunity with those sellers failing at these lows. So I would expect price to go lower, but you know, this is a range-bound market. Again, slight edge to the bulls here right now. The volume is very balanced. The moving average really hasn't played a very big impact on this price action so far this week. You can see above and below. So, you know, my gut tells me the bulls have a little bit of an edge on this, but the chart is what I trust. And you can see here almost a triple bottom, triple top at the high there. This is a range-bound market this evening with a slight edge to the bulls. So same plan as we talked about on the S&P. Our plan here on gold is to fade those breakouts. Nothing different here on a range-bound market. We are expecting range rotation, right? Just like in a trending market, we'd expect channel rotation on a range-bound market. Think of a range-bound market as just a sideways trend channel, right? Think of it as a trend channel going sideways here. That's really all it is. And so we expect to see rotation from high to low, low to high. Most important thing about this type of environment, like we talked about the S&P, is that the only time we are going to trust a breakout is after the sellers try twice and keep going, or the buyers try twice and keep going, right? We called it the two-try rule. Markets love to try things twice because the markets are filled with human beings, and human beings like to try things twice. If it doesn't work, they usually give up and go the opposite direction. And so we know we're going to be looking for sellers to try and fail, right? Buy those lows. Buyers to try and fail, sell those highs. And again, if somebody happened to put a gun to my head and said, Joe, you got to choose a direction, what direction would it be? I would say seller failure at these lows, just based on what we saw in today's session. So buyers appear to have control, but it looks like they've kind of bobbled that control here for the short term. Again, as we go lower, keep an eye on those levels below, 62.5. 60 even and 57.5. We'll be looking for seller failure to buy. And again, we will continue here tomorrow to fade all these breakouts until the two-try rule confirms we have a new trend. So stay patient, wait for those breakouts to fail, buy those lows, sell those highs, and again, a little bit of an edge there to those bulls here as we go into tomorrow's session. And then looking at the euro right now. Now this euro, this was a tough one. I know it seems very easy at first. It seems like, what was so difficult about this? But the reality is, if you look inside of this, you'll notice I had to go back and use last Friday's information. I don't do that very often. I like to use just today's information. And if you just use today's information, you can see the buyers actually got a little fake break at that low and tossed it higher into a spike in channel. So I was really hesitant. It's definitely bullish. In fact, in my opinion, the most important clue on this is that spike in channel. That spike in channel on this euro, and at least in my humble opinion, is the most important part of this analysis tonight. But really, I'll tell you, it was pulling teeth trying to get me to feel comfortable drawing this channel. I realize what you're probably thinking right now. What is so difficult about that channel? It looks beautiful, but the reality is the channel is actually being used off of last Friday's low. That is not reliable information. I really would like to use Sunday evening's low, right? When this week began at the Globex 6 p.m. Eastern Standard Time, Eastern Standard Open, which of course, if you're in Europe, was actually 5 p.m. Eastern Time. And now you can see why the confusion and that little bit of analysis paralysis comes in that day after daylight savings time. So again, you can blame a little bit of the slop and chop this morning on daylight savings time. And remember, we're all human beings out there. It's going to take you a few days for your body to adjust. Whether you like it or not, subconsciously, you do need time to adjust to that time change. That's why jet lag is so difficult to recover from within those first 72 hours. So give yourself some time if you're in Europe to get your membrane back on track. I know it's always difficult. I'm going to be singing the same song and dance this time next week. But again, I really don't like to draw that big bold channel the way that I did, but boy, it's really the only option for us right now. And again, really, I can see three main things on this chart. One is going to be that bull channel. That bull channel definitely tells me, as again, kicking and screaming my way to this bull channel. But we definitely have this bull channel here. Bull channel's there. We definitely know that's going to be one clue on this chart. Second clue is going to be this spike in channel. And in my opinion, the spike in channel really is the most important clue here right now. Just like we saw on crude oil, where crude gave us that bearish spike in channel, this is the same thing. The buyers are very strong. Okay, spike in channels, they are strength patterns, right? And of course, what you want to remember about a spike in channel is the buyers that bought this price up, they need to get out of their long positions so they can re-engage, right? Reinitiate some new positions here. And the only way to do that is going to be for a deeper correction. Unless this market just goes on a huge tear, you really want to stay patient right now. That spike in channel, what you want to remember about the spike in channel is stay the long side, but really what you want to wait for is that deep correction. Wait for that deep correction. Remember, most of the time, those deep corrections are going to come back to the base of that channel. So we know where we're going to be looking for that deep correction. It'll be somewhere around this area here, between that 1034 to that 1020 area. And then the best way to trade this, because what's going to happen is you're going to see that deep correction is going to get some sellers taking the bait here. So you want to wait for the sellers to fail, and that'll be your first buying opportunity. And then if you're unable to get the seller failure buying opportunity down here, then it will be just buying pullbacks on the way higher here, because then this is going to be an A, B, C, D going right back higher. So bullish spike in channel, I think, is going to be the most important clue on this chart. And the third clue we haven't talked about yet is going to be that volume profile. Very easy to see. This is what you would want to see if you have a bullish market. All the volume clearly pegged into the upper 1/3 of this range here for today. The most number of bullets were spent up at those highs. So clearly there is more interest right to the upside here right now to the downside. Combine the long-term channel, which again, I think the long-term channel is suspicious right now because it relies on last Friday's information. But we have enough from volume profile, that bullish spike in channel. And again, don't forget, we're going to use that AB equals CD. That's going to be your target, but we won't know where that target's going to be until we get that deep correction on the euro. Okay, so euro is bullish this evening. We get a bull channel, a bull spiking channel, and a bullish volume profile right now. We're going to stay patient for a correction back to the lows of that channel, and then we're looking for seller failure as we start going higher here to be the first buyers in on the tape. And then again, if we don't get the seller failure, we'll buy those pullbacks on the way up to that measured move continuation going higher. Guys and gals, that's my plan here. Again, bullish on the euro, bullish on the gold. Again, range bound on gold. Expect a deep move into this low. Look to buy those lows with seller failure. Remember, wait for the failure. S&P, your guess is as good as mine as far as direction goes on the S&P right now. Stay patient on the S&P. Don't you dare blindly buy those lows or sell those highs. Wait for failures of the breakouts at the highs and the lows. And again, kind of the polar opposite of the euro, we have this bearish spike in channel down right now, which tells us, again, expect a pop back up. Buyers, you guys can buy this pop back up if you want. Just make sure you're aware. If you're going to be a buyer right now, you're going to be against the trend. So all trades, trading long right now, I would recommend using seller failure here, right? You know you're going to see some sellers come in and try to sell that moving average, try to sell that high, wait for those sellers to fail, and you can buy that pop back up into that correction zone. Up in the highs, though, then we're going to look for those sellers to fail, or those buyers to fail to sell that correction zone. And at the same time, I won't be very surprised the way this thing felt today. I wouldn't be surprised if we see this thing by tomorrow morning, early tomorrow morning, we see this thing all the way back up into this range, and we'll still be looking for those buyers to fail to sell that sucker right back down in this bearish market. Guys, that's our plan for tomorrow. As you guys know, don't forget, always appreciate your time here every evening. Grab your free pass, register for the newsletter mailing list, download the charts, and make sure you be careful out there tomorrow. Be careful out there. Wait for those entry triggers. While I have your attention, don't forget, join the free trial here. If you got some free time, head over here to schooloftrade.com, grab a copy of your free trial. We'll invite you to come out and test drive our live trade room for a week as a guest. And of course, we got beginner, intermediate, and advanced levels of membership here at schooloftrade.com. And always someone standing by here 24/7 to answer your questions. Remember, no question too big or too small for us here on our live support. And I always love to hear from you. Guys, don't forget, would love your feedback on this. Send your feedback to jj@schooloftrade.com. Give me a thumbs up on the YouTube video, and don't forget to read the description of this YouTube video for our disclaimer today before you go risking any of your hard-earned capital. My name is Joseph James. Thank you so much for being here this evening. Hope you had a great weekend. Halloween is right around the corner. I know, and so is daylight savings time coming to an end. We're going to squeeze out the last few drops of the sunshine this week. Don't forget, we got Fed Day on Wednesday. We'll talk more about that tomorrow. And you guys be well out there. Be nice to each other, all right? Share this with a friend, and I'll see you same time, same place tomorrow. Adios, amigos. Bye-bye for now.